What is up, YouTube? Very, very interesting topic today. You know, I was inspired on this a couple years ago when I saw BeatTheBush talking about tax refunds and why they're not good.
How's it going, everybody? This is BeatTheBush. Today I'm going to talk about tax refunds and how you really should not be getting a tax refund at all because you're just giving a loan to the government.
So I wanted to talk with you guys a little bit today. I wanted to expound on his messaging. Great video. If you haven't seen the channel, full of life hacks. Love that channel and content, so make sure you check it out. But I want to talk a little bit about tax refunds and exactly how those could be used differently in order to better your finances substantially than simply giving your money to the IRS as a free loan throughout the year. Now, a lot of people sort of brag about their tax refunds. It was funny because that stood out to me in BeatTheBush's video where he was talking about this being sort of an honor to receive the refund. And I experience that every day. It's like people come in and they think, well, I've done so well, I got this big refund coming. And yeah, it's a windfall of capital. That's always enjoyable. I get it. But if you really conceptualize this and reframe it, you'll begin to realize just how foolish it is to give the IRS your money. Essentially what's happening is your withholdings are too large and you're essentially giving the government your money each month, which they just return to you at the end of the year when they realize that you've overpaid, you file your tax return, and the reconciliation process essentially gives you your money back. What I'm here to demonstrate is that's definitely not the best way to do it. It is recognized in that video, if I'm not mistaken, that there becomes this aspect of a forced savings account. That's sort of this ongoing topic that happens here on YouTube where people are constantly celebrating people's inability to be in control of their money. If you are incapable of allowing that added cash flow every month to be used in a productive manner, then this entire channel probably isn't for you. You need to reorganize and recenter your priorities, because it's just essentially implying that you're not somebody that's good with extra money and that you'll probably waste it if you have it. Well, guess what's going to happen to your tax refund if you're one of those people too? It means you're going to get this big windfall of capital and you're just going to frivolously spend it. We're trying to avoid that. So let's assume that step one, you're responsible enough with money that you realize you could use that extra money each and every month in a productive way to really put yourself on a much faster path to creating wealth. Okay, so now that that's assumed, let's go ahead and take a look at exactly what I mean here. In order to start this off, I want to recognize that the average credit card debt per age is pretty astonishing. Okay, so let's go through each category and take a look at this together, because I want you to compare how closely you fall to the national averages. Nationally, if you're less than or equal to 35 years of age, your average credit card debt is going to be somewhere in the $5,808 range. This is as of September of 2019. If you're 35 to 44 years old, you're going to be sitting closer to $8,200 worth of credit card balances. As you go up in age, you'll see that your balances tend to increase until 55 to 64, where they go back down to about where you were in your mid 30s to mid 40s. And that trend continues until north of 75 years old, where you're still sitting at an average of $5,638. Now, just because these are averages doesn't mean everybody has them, right? It could mean that somebody has all their debts completely paid off, whereas somebody else has 2 or 3 times this amount of money. Now, keep in mind that by having a tax refund, which was a national average in 2018 of just under $3,000, $2,899, that $3,000 in tax refund money could easily be applied towards these balances on a monthly basis. Now, if you have an average of, say, $6,000 worth of credit card debt, at the national average interest rate, which on more seasoned accounts tends to be around 14.14% compared to new offerings, which is actually closer to north of 19%, you're going to end up spending roughly $3,100 in interest on that $6,000 balance. That's at the 14.14% range. If you have, instead of receiving a $2,800 tax refund at the end of each year, an additional $225, $250 per month in net cash flow because you adjust your withholdings on your W-4 form, well, now all of a sudden you can apply that money in a more favorable way and at minimum be generating the equivalent of a 14+% return on that money. Why would you allow the government to keep the money where they're not paying you a cent and instead take it and put it to work for yourself? Now, taking it and putting it to work through a savings account is definitely not what I would recommend here on this channel. Again, BeatTheBush, which tends to be a more conservative minimalist himself, is going to recommend that you could potentially get a higher yield savings account and at least make something on it versus nothing. Here on this channel, I want this money to be working hard. I want my tax refund or the money that would otherwise be withdrawn from my check to be working hard for me, which means at minimum, I'm coming after these accounts so that I can prevent 14 to 19% interest while simultaneously driving my credit scores up, which in turn is going to then be benefiting everything from my insurance premiums to my lender worthiness, where I can then borrow more debt weapons and start leveraging into income streams. These are generally not income related balances. When people borrow for credit card debts, they are usually applying that towards consumer-related purchases, unless these are business credit cards, which this is a national average on consumer credit card balances. Many people do use their consumer credit cards to grow their businesses. Please make sure you check out the video on why it's very important to avoid doing that. But assuming these are all consumer-related purchases, listen, this is not leverage. This is the worst kind of debt you can possibly have, which means you want to attack and eliminate this so that you can start to invest for income reasons and cash flow purposes. So thank you guys again so much for joining us here on this video. I hope this has at least enlightened you to get after your W-2, go on YouTube and search videos on exactly how to fill out that form so that you're not giving the IRS any money unnecessarily. In fact, it is best to owe the IRS just enough before you're penalized in order to actually borrow money from them to invest into your future. But if anything, at least balance it to zero and start using that money in your favor instead. Guys, make sure you drop a like on this video if you haven't already. Subscribe to the channel as well. We'll see you on the next video. Until then, make it a great day and take care.
Alrighty, so I realize that some of you have not gotten one of the single most popular budgeting tools available, not to mention it's free, and that is called the Cash Flow Cruncher. So what I want to do today is walk you through the process of downloading your very own copy. It comes in the form of an Excel spreadsheet, so it's very easy to use and it's quick to navigate. So let's go ahead and walk through that process together. Go to cashflowcruncher.com, which will take you to the download page. Simply type your email address into the field to claim your free copy and go ahead and select the red button. Immediately it'll pull up the download button, which will open a new Cash Flow Cruncher spreadsheet. The first page it'll open is the Cash Flow Summary tab, which is a non-editable page. It's very important to understand that this opening tab will not require you to put any information into these fields. This actually imports the data from the other tabs below. Now, if you've ever used an Excel spreadsheet, you'll navigate the spreadsheet by going to individual pages down here. And it'll start with the revenue and assets page. On this page, you'll want to itemize each individual income that you bring into the household or the business. Now, it's always been my recommendation that you create an individual cash flow cruncher for your businesses, an individual cash flow cruncher for your real estate, and an individual cash flow cruncher for your household.